Hello, let's get into the Florida and South Florida real estate market snapshot for mid 2025. My name is Blanco. I'm a broker here in Stratwell. I've actively sold over 3,000 homes in the South Florida market. And today I'm going to be covering this market snapshot. Let's get into it. All right, let's go with the statewide numbers first, just to give you a larger perspective, and then we'll get into the Miami numbers. So the South Florida single family homes 2024 data highlights. Here we go. So these are the closed sales, 252,668, down from 2.9 from a year ago. Median sale price, that's in red because that's not a favorable number, as you can imagine. Median sale price is up 2.4%. The number of sales are down, but the median sale price is up by 2.4%. Active inventory, that's the cumulative of all the properties that are on the market at one time in Florida, almost 100,000 properties. It's up 27%. It's still not yet at the number where we were at pre-pandemic. So active inventory is still below, even though it's gone up 27% year over year. Let's get into dollar volume, up 2.5%. So there's less transactions happening, but the total dollar value of those transactions is higher. Why is that? Well, it's likely because there's more higher sale price properties selling because there's a lot of more wealthy migration happening into Florida. So there we go. Listings are up 9.5%. So that's the new number of new listings coming in. So we're up 9.5%. The reason it's in red is because that's not favorable for the market, right? More inventory, it creates more supply, and with more supply and equal demand, you expect a pricing adjustment, although we haven't seen that in Florida on the single family residential properties. All right, last number here, new pending sales down 1%. That's the number of new contracts going into contract, 1.5. All right, so just normalizing post-pandemic supply. That's the reality of the situation. All right, so here we go. Let's go into the Florida townhouse and condos. Townhouses and condos are bunched together. They're not separated. That's because Florida can't produce the data to separate those because of the way the MLSs are throughout the state. So it's combined townhouse and condo. Closed sales is down 10%. Median sale price up 0.8% at 320,000. Active inventory up 43%. Now you're seeing a lot more increase there in the condo market, and condo market is close, very close to the pre-pandemic numbers that we saw before the pandemic. All right, so dollar sales value down 9.1%, new sales up 11%, and pending sales down. Let's jump over into a conversation here about this. So what we're seeing here is we're seeing lending restrictions, we're seeing insurance drag, and we're seeing institutional pullback from the investment in these properties because of the changes with the Surfside collapse, and those are causing some impacts, some concerns. I think it's some short-term pain, but I think long-term, people are going to find out once you get these condos repaired and financeable, insurable, and up to standards, you're going to see more people feeling safe about moving back into condos. And I think buying a condo today could be a good opportunity in terms of going when everybody else is going one way. It's good to go the other. But I'm going to talk more in depth about condos because what happens is everybody's grouping it all together. So stay tuned, because as we get towards the end of this, I've done some interesting breakdowns of certain areas in the condo market so you can see how different it is when you separate the condos based on certain conditions, and we'll go into that a little bit later. Before we do that, I wanted to get into the South Florida MSA. Now, the MSA of Florida, South Florida, is Dade, Broward, and Palm Beach, all three counties. That's the Miami MSA, but we're going to get into the numbers here. All right, so I didn't want to break it down county by county because it gets real specific. If you have more questions down to the county, down to the area, down to the zip code, down to the market geographics, I'll be happy to break that down for you. You'll get my contact information at the end of the presentation. Let's keep going. All right, Miami MSA single family. Now we just took the year to date, June 2025. What's happened from the beginning of the year to the end of the year? How are the numbers shifting? All right, so we've seen closed sales volume go down, set 5.7%. That's This is the Miami MSA comparing the first half of this year to the first half of last year. So it's a 1 year comparison of the same time frame, January through the end of June. So beginning of January through the end of June 2024 compared to beginning of January, end of June 2025. That's these numbers. Okay, cool. So in a year, over this time frame, we see a 5.7% decline in the Miami MSA on single family homes. We've seen median sale price go up to $645,000 at 1.6%. We've seen active inventory go up 33%. We've seen the dollar volume go up just 0.1%, and new listings are going up 4.8% at 31,188, and new pending sales down 7.6%. So again, I'm marking these in colors so it gives a little bit of reference, what's good, what's not so good. And of course, when you have active inventory there and you keep on adding inventory while you have pending sales going down, that's not a good trend. But we'll see how it all shakes out, because what's blown my mind month over month over month over month is how resilient the pricing has been. Pricing is still going up despite these factors. And I hear the Miami single family here, I have a note here that's still below the units where it was at. That's where it needs to be at the prehistorical level of average active inventory. All right, let's jump into townhouses and condos. But as I promised, later I'm going to break down the condos by a couple of the geographic markets to point out how this condo changes in law are affecting some condos, but not all. So let's get into it. Here's the Miami condo townhouse market. Miami MSA down 14% in closed sales, down 1.3% in median sale price, down in active inventory, down in dollar value, down in new listings, which is actually a good thing, and down in pending sales. So, this is interesting, right? We're seeing active inventory creep up, but the number of new listings not increasing. So how does active inventory add up? Well, it stacks, right? If 10 people list their home in January and 10 people list their home in February, by the end of February, you have 20 homes on the market, right? So that's the cumulative, that's the active inventory in the market. And so what you're seeing is as days on market increase, of course, active inventory is going to increase because there's more every month. The house gets counted for every month, right? So if the house takes 6 months to sell, it was on the report for 6 months. Or if it only took 1 month to sell, it was only on the report for 1 month. So that's interesting to keep that in mind. So active inventory in condo and townhouses down, good number. All right, so let's get into the macro landscape. A lot of clients say, okay, well, I want to know what's going on. What is behind these numbers? Well, sustained average mortgage rates at a higher than normal. Oh, I don't want to say higher than normal because they're actually lower than normal, but they are higher than we've seen in quite some time. So that is concerning the marketplace. You have this condo post-Surfside regulation issues, and you have insurance costs. So I'm going to break down insurance costs as well. Then you have versus the capital and talent migration that we're having here, and our international investment market, which is really, on the positive side of that. So you have some pros and some cons, things working against us. That's where you have a market that's kind of like a mixed bag, right? So what we're really seeing is that you have a wealth and talent migration, and that's causing people to invest in higher end properties. So the new, the nice, the expensive, that's getting bought up, whereas the not so nice and challenged buyer markets, those properties are sitting longer. So that's where you get the mixed bag of information and data, and it's hard to really understand. So what's the market doing? Well, the market's doing what it's doing, but in all these little sub markets. So it really depends on what you have to sell and when you're trying to sell it and what the condition is of the property and where it's located. All those factors playing in, right? So let me tell you about this. Miami ranked number 1 for job growth in 2022 to 2023 quarter 4 compared, right? So beating out all these other cities, including, well, obviously the U.S. and Dallas, beating out New York, San Diego, Illinois, and California. So we're seeing affordability issues, constraints, but more jobs and more income driving the market. Another thing about jobs and income is, $98,000 is the average salaries of companies relocated to the greater Miami area. 51 new companies coming into the greater Miami area. 14,000 new jobs, almost 15,000. So really growth, a lot of growth in our GRP is at 1.5%. Now, 1.5 billion is a big jump from where generally I've seen it. I've seen numbers in the 800, 700, 800,000, 700, 800 million, and now I've seen 1.5 billion. That's a big number jump. These other numbers are in line with what we normally see, but I mean, the bottom line is that there are jobs and people continue to moving here. So that's driving prices. What we haven't seen is a real break from these insurance costs. So an average insurance premium in South Florida was about $2,000. In 2023, that jumped up to $6,000. Now it's settling down. 2025, we haven't seen a little bit of a softening, but it's still very expensive to insure homes in South Florida. So that was something to watch. Where is jobs and where is insurance rates in Florida? Because those are two factors that are really affecting affordability. All right, so I promised to go into the condos. Let me break down what the methodology here was and what we have here. So what I did was I said, okay, let me see high-rise condos in the downtown market, 1/2 mile radius at 205 years or older construction. So these condos aren't impacted by the new Florida law that requires a milestone inspection and a structural integrity reserve study to be completed. That doesn't happen until the building is at least 25 years old. Well, I looked at 2025, so these buildings are as old as 20 years old. So they have 5 to 10 more years before the reserve study is going to be required for these buildings, right? So looking at the data is showing, yeah, there is less sales, 13%, but the average list price and the average sale price is up. 13% average sale price is up year over year in the first half of the year. That's impressive. And so that's not something that you looked at, you would think, based on the numbers I showed you for all of Florida and all of the Miami Metro, right? And the reason for that is that there's other markets and sub-markets of condos that aren't doing so well. And that is what's off-shifting the numbers. Let's go into the other segment. The other is I checked this area here. I go back to the map here. This is, by the way, this is like a little blue section here. That's the Miami downtown Metro. That is Brickell and downtown Miami. And then over here, it's further north in near my office, actually, is where there is a lot of condos. These are older condos. They're suburban. It's low rise, mid rise. Most of them are 3 stories or above, and all of them are older than 25, 30 years. In this case, because they're so far away from the ocean, it would be 30 years that they need to be. So look at the number differences here. So here we have almost a 20% change in the volume of sales. List prices are down, sale prices down 3.8%. Average list price per square footage is going down. Average sales price per square footage is going down. The average days on market is going up, which is not a green. It should be red. It's not a good thing. So we went from, on average 39 days to 76 days. And then also what's going down is the percentage between the list price and the sale ratio. Now that's just a mixed bag of property in a geographic territory. The age wasn't considered here. They all happen to be older construction because of the geographics. These are all low mid-rise and they're all suburban. And those are the numbers. Now, we're going to see the numbers on a 55 plus community, right? This is all a 55 plus community. These people are much more impacted by the changes because in addition to the fact that they're dealing with the milestone inspections, they're on fixed incomes, right? They're 55 plus. Most of these 55 plus communities are more like 65 plus in terms of the ages. And on average, they're probably closer to 70 years of age. So these are the numbers for that. This is Century Village, if you're familiar with it. It's in Pembroke Pines, just off of I-75 in the South Florida market. And this is not the worst of them, by the way. This one shows a mid-rise 55 plus community, older construction. This is the demographic that I was talking about. It's geographically centered. It's Century Village. And you can see what's happened. The number of closed sales is down. Look at the average sale price. It's down 16%. Look at the average price per square foot, down 17%. Average days on market, it's gone up 33.9%. The list to sale price ratio is going down. So pricing is an issue here. We got to be sensitive to pricing when we're looking at these 55 plus communities with these other issues that are combined with the SIRS, which is the Structural Integrity Reserve Study, and the milestone inspections and insurance costs, and all these things combined, plus fixed income. That creates a problem. It creates a sense of urgency to sell, and then you just don't have a whole lot of 55 plus community buyers coming in, jump into this type of situation. So that's the circumstances. I think it's an acute problem. I think it'll resolve itself, but it's going to take some time. And I'm not an alarmist, but these are the fact of the numbers. I am bullish on the future of Miami and the South Florida market, just because I've seen it happen time over time again. There are a lot of naysayers, and I think most of the people believe in the future of South Florida because they see that jobs are here. They see the international migration. They see all the positives that are coming to South Florida. Tax-free, income tax. There's so many benefits to living here. There's the weather, the culture, all the reasons I stay here. I see that as the reason why a lot of people want to be here. All right, so let's get into some of the foreclosure metrics. This is the REO and foreclosure momentum in the MSA area. New pending sales is up, so there's more new contracts under REO. That's because there's more REO inventory. So there's been a 66% increase in the amount of REO inventory to the market. We've seen dollar volumes go down in terms of the amount of sale. That's because those prices are going to get hit harder as inventory is going up. Active inventory is up 85%. Closed sales is down 8.2%, and the median sale price is up 4.2%. So that's the numbers on the REO. And I would say my guess in terms of why the median sale prices are up, and this is anecdotal, is that you're seeing higher quality product that is REO, whereas what we're seeing a year ago, 2 years ago, was really disparaged properties or 55 plus condos with really problematic properties were driving the value down. Whereas now I think the newer inventory that's coming online is better quality product, more single family, in much better condition. So those are factors that are driving into it. I think some strategic pricing for buyers. I'm telling buyers, hey, look, if you're going to be buying in the 5+ year horizon, I never have advised anybody to buy if you're buying in the short term. Real estate is a long-term investment play. It's a lot of cost involved in acquiring and disposing of real estate. So if you aren't planning on living in a property 5 years and real estate values aren't going up incredibly fast, you're going to be in trouble. And I don't expect real estate values to go up incredibly fast over the next 5 years. I don't expect them to crash either, as many people alarm that they will. I don't agree with that either. But I think that if you're going to be buying in the 5+ year horizon, it makes more sense to buy than it does to rent. You get the stability. The stability is the biggest part of it in terms of your family and the structure, but you get that long-term tax benefits. You get the long-term appreciation. So first couple of years, it's not so fun. But as you get further down, you look back and you go, wow, I can't believe I'm paying so little compared to what rents are at now. So that's a factor. Seek concessions. Now it's a good time. Like if you're a buyer, there's more options available. You can get concessions. You can do rate buy downs. You can get conditioned leverage. Like you can work with the seller to hold a second mortgage or things like that. So there's really creative things we do. You could also make sure you underwriting the property insurance by the condition of the property. So that's a factor to consider. Focusing on properties that are more repaired or property that you can get into the right condition so that your insurance premiums can drop. Because if that's a factor, of course, insurance premiums drop quite a bit with newer construction and more repair construction. Having said that, if you're on the seller side in the disposition strategy, turnkey upgrades is highly recommended. And also immediate price alignment. So sometimes, you want to test the market, you want to see how things are going. You might want to go on the higher side, check it out, but don't sit there too long because the market it doesn't take too long for the market to tell you what's happening. And if you need to make a quick price adjustment, it's better to do it faster than to keep chasing the market down. I recommend pricing right from the beginning. And if you find that that's just unfathomable. Just go for the higher price, but be ready to make a quick price adjustment. Consider, the cost of carry versus the market lag trade-offs, because the days on market is not what it was, a year ago or two. Also, one of the other recommendations I failed to add here was the repairs. So when I'm talking about to sellers, I'm encouraging more repairs. There's a lack of quality product on the marketplace today. There's a lot of older homes that need some repair, haven't kind of gotten that love they needed over the years. So some fresh paint, maybe some new vanities, some new lighting, new light switches, fresh landscaping, maybe a new roof to get over the age issues that we're having with roofs. There's some of those repairs, they're going to really get your ROI back and shorten those days on market and avoid other risks that are involved with having, vacant property sitting long term. So that's it. That's the market study. I hope you found this video really informative and short as possible. That was my goal. Here's my contact information. You can scan that QR code. If you've seen this video on social, please go ahead and comment what your thoughts are on the video or ask any questions. I'll be happy to do that. This QR code will take you to a link tree. There you'll find our YouTube channel. You'll find my contact information. My contact information is also below. You can also check us out on our social channels. You can check out our website, all kinds of cool stuff you can do. My encouragement is let's have a conversation. Let me answer any of the questions, any of the doubts that may be left in your mind. I'd love to have a conversation with you. Have a wonderful day. Thanks for watching. Comment and like below and share this video to whoever you think will find some value in it. Have a great day.